And so we talk about brokerage accounts. People also have concerns that, okay, is my money safe? Okay, so let's talk about it. Because whenever we have a regular bank account, we have the FDIC. FDIC is the Federal Deposit Insurance Corporation. And so that covers your funds. If you use a credit union uses something called the NCUA. The NCUA is the National Credit Union Administration. Memory serves me correctly. I believe both of those give you coverage up to $250,000. Brokerage accounts are a little bit different. Brokerage accounts use something called the SIPC. SIPC is the Security Investor Protection Corporation. And so it protects the assets that you have inside of your brokerage accounts. Most of those run around $500,000, if I recall correctly as well. There are also some other companies that actually have more than that. But one thing to keep in mind is that the SIPC does not insure losses. So if you go and you invest in something and lose money, you can't then say, okay, SIPC activate and give you your money back. That's not going to happen.
Everyday people working 9 to 5, saving up that money, trying to survive, investing in the future, trying to be wise. We're gonna be money heroes. Yeah.
Hi, I'm Nick Johnson, host of Everyday Money Heroes, and I've reached early retirement. I'm here to provide information on how to obtain financial independence and inspire you through sharing stories of everyday people who are turning knowledge into freedom.
That hustle, always reaching for the sky. We're gonna be money heroes, never gonna shy.
Hello, and welcome to Everyday Money Heroes. We provide information and inspiration to people of all ages to take control of their financial journey. I'm your host, Nick Johnson, and today we're going to discuss brokerage accounts. Before we get into our episode, I'd like to ask you if you're watching Everyday Money Heroes on YouTube, that you would subscribe. If you're listening to this episode by way of podcast, that you would follow us at your on your platform of choice, and also that you would be so kind to give a share to this content to someone that you think would be interested in learning more about taking control of their finances. So, in a previous episode, which I'll be more than happy to link down in the description, we talked about compound interest, and compound interest being the vehicle we use to achieve financial independence. A brokerage account is technically the tool we use to obtain that compounding through our investments. So, if we want to think about what a brokerage account is, it is more like a financial hub. A brokerage account is a specialized account that acts as a bridge between you and the stock market. So, if you think about it, you can have other kinds of accounts, but you really can't purchase stocks and things like that. So, you can go down to your credit union and get a savings account, but you're not buying stocks in it. Or you can go get a checking account and you're not buying stocks in it. So it acts as a bridge between you and the stock market. Like I said, unlike a standard banking account that just there to hold your money, a brokerage account is designed for holding and trading investment assets. Okay. When you open up a brokerage, it's very simple. We'll talk about that a little bit later on as far as how you do it, but it's not as complicated as you think it would be. You can get it done rather quickly. And so let's talk about what you can purchase in a brokerage account. Okay, so we talked about it being the bridge between you and the stock market. So one of the primary things that you think about buying in a brokerage account is just that stocks. You can purchase shares of individual companies. You can purchase mutual funds. You can purchase ETFs. And for those of you who may have not heard previous episodes, an ETF is an exchange traded fund, which is technically like a mutual fund, but it's traded like a stock. Okay. Also, depending on the brokerage account, you can buy bonds, and bonds are literally just loans that you make to entities like corporations or to the government in exchange for interest. There's also T bills. T bills are short term, low risk instruments that you can use, usually ranging anywhere from like weeks to 52 weeks that they use those T-bills to do things like funding public projects, things like that. And also, some brokerage funds, you can also do things like purchase CDs, which are certificates of deposit. Also, now granted, you can't get CDs from some banks, but you can also buy them through some brokerages. Also, what you can do is that now some brokerages actually allow you to purchase things like gold, silver, and also crypto if that's what you're interested in. So brokerages really allow you to flex your investing muscle by allowing you to use a variety of different instruments to invest in. So, first of all, let's talk about some of the things that you can do within those brokerage accounts outside of just purchasing those instruments, or just discuss some of the kind of core distinctions within a brokerage account. The first of all is flexibility. And so typically when you're discussing your 401k, you have certain limitations on it. So every year, the IRS comes down to see how much you can invest in your 401k. But in a taxable brokerage account, there is no limit in the amount that you can put into a taxable brokerage account. So you can put as much as you want to in there. Now, granted, let's kind of go ahead and take just a quick step back because I'm saying taxable brokerage, but also within like the same brokerage that you want to, you could have numerous types of accounts. And so, for instance, I have a Fidelity account. Within that Fidelity account, I not only have a taxable brokerage account, I also have an old HSA that I had from a previous employer. And I did a video on HSAs. If you're not sure what that is, definitely just go ahead and search on the channel and you'll see it there. And so it gives you the flexibility of being able to put as much money as you want to, and also being able to almost act as an umbrella for several different types of accounts. Okay, so you can have like an old traditional IRA and have it at a brokerage and kind of have it still at the same brokerage up under your single sign in or your log on. Because once I sign on to my account, I see all my different accounts. So you have that flexibility. Also, there is the opportunity to go ahead and have different management styles if you want to. So there is opportunity to go ahead and you can basically do everything yourself. So you can be self-managed. There's some brokerages will do stuff like robo advisors and things like that. And some even offer full service. Here, Everyday Money Heroes, we encourage individuals to take the simple path to wealth, which is just investing in low cost ETFs and mutual funds. So there's not really a whole lot of care that's needed to do that. And so kind of set it and forget it. So, but there are a lot of different options that you can do as far as, robo advisors and full service. I get phone calls all the time from Fidelity saying, hey, you qualify to speak to somebody. I haven't taken them up on an offer. I don't know if I ever will. I might one day, but I have not. So you can do that. Also, there's options like tax loss harvesting if you want to. If you're not familiar with what tax loss harvesting is, for whatever reason, if you have a position in which you have not made money but lost money, you can sell that and then try to use that to credit some of the gains that you've had in other positions that you do have. So there's a lot of different things that you can do within a brokerage account. Also, there are things they might call like a cash sweeps account, which is very similar to a high yield savings account. Personally, for me, I used to have a standalone high yield savings account, but the rates I was getting through my brokerage was so competitive, I just put everything in there. And actually, Fidelity also has option where I can go ahead and have my credit card payments and things like that auto debited out of that sweeps or that cash management account. So it's just really easy for me. It allows me to get the maximum amount of interest that I can. Because at one point, I used to have a completely separate bank account that all the stuff used to come out of. And that bank account was like a regular bank account. So it really gave me no interest or anything like that. So I'm happy to be able to have my money getting the maximum amount of interest that it can while it's sitting in that account waiting for any debits that might be coming. And so we talk about brokerage accounts. people also have concerns that, okay, is my money safe? Okay, so let's talk about it. Because whenever we have a regular bank account, we have the FDIC. FDIC is the Federal Deposit Insurance Corporation. And so that covers your funds. If you use a credit union uses something called the NCUA. The NCUA is the National Credit Union Administration. Memory serves me correctly. I believe both of those give you coverage up to $250,000. Brokerage accounts are a little bit different. Brokerage accounts use something called the SIPC. SIPC is the Security Investor Protection Corporation. And so it protects the assets that you have inside of your brokerage accounts. Most of those run around $500,000, if I recall correctly as well. There are also some other companies that actually have more than that. But one thing to keep in mind is that the SIPC does not insure losses. So if you go and you invest in something and lose money, you can't then say, okay, SIPC activate and give you your money back. That's not going to happen. Okay. The SIPC simply just ensures what you have as far as the assets within that account, not any losses that you might have. All right. Now, there are many different options when it comes to brokerages. Some are better than others. Okay. I'm going to share to you just a few. There are many, many that are out there. Each have pros and cons. Some might have a better mobile app than the other. Other might have a better user experience on the website than others. For me, personal things that I look for is that I want to have ease of use. I want to have easy access to my money. And also, I like to have a brokerage that provides resources around learning. I'll tell you the one that I personally use, and I think I've kind of already showed my hand when it comes to that, but I've had experiences with several of the brokerages that I'll share with you on this list I'm going to mention in just a minute. But ultimately, everybody may find things with a particular brokerage that somebody else might not care for, or it might not matter to them. So first of all, let's go ahead and talk about Charles Schwab. Okay. My previous employer used Charles Schwab for the 401k, and I actually have an UGMA set up for my kids there. At one point, I had a Roth IRA through TD Ameritrade, and Charles Schwab acquired TD Ameritrade. So that account actually ended up getting um, integrated into the Charles Schwab account that I already had. So no real big issues with them. I don't see a whole lot of resources that they have, like education and stuff like that. So that's one thing that kind of I keep them just because I don't want to have everything at one place. So I do keep my I just left my 401k there. I didn't roll it over to somebody else because the amount of the balance that I have in there, they said, hey, you know what? We're not going to charge you any money or any additional fees to keep it over here once I left my employer. Um, Vanguard has some really good products, especially around ETFs. You might hear individuals talk about VTI and VOO as far as ETFs, which are the Vanguard. VTI is the Vanguard Total Stock Market ETF, and then VOO is the Vanguard S&P 500 ETF. They're very low expenses, um, but their online platform not that great. They did just recently start. At one point, they were not letting individuals do fractional shares. I've heard individuals say since recently that they allow you to do fractional shares. Charles Schwab also. Let me take a step back. Charles Schwab also lets you do something that they call slices. So they have a list of stocks that you can buy a portion of or a fractional share if you don't want to get the whole thing, but not every stock. You can only do some of them. They have a list of some of the larger cap stocks that you could do it on. Vanguard apparently is supposed to be able to do it also, but they do have, they really focus on being able to keep costs down. Also, other ones that you might hear about is SoFi. Haven't had any experience with SoFi. It seems like really big out west. I'm in the East Coast, so I don't really do a lot with it. But apparently, they must be doing good. You know, they got SoFi Stadium, so they're doing all right. Then Robinhood. A lot of younger investors really like Robinhood. Um, I had soured on Robinhood at one point around some of the things that they did as far as like releasing funds and things like that some years ago around like the meme stocks. But it appears that they've changed. They've tried to leverage some of that experience to be a better company, and so I have heard of them trying to do a lot of things to just be, show goodwill to their customer base. And so some people are using those. I personally, I don't use it. I know they're big on a lot of the different things um, that some of the younger investors are interested in, but you know you have to go ahead and do what you enjoy because I've heard the interface is great. I've seen the interface. I haven't used it, but a lot of people really enjoy the interface. Personally, for me, my favorite is Fidelity. I've already mentioned it. I like that you can buy fractional shares on any stock. They'll let you do any amount you want to for any stock. Um, the the app is great. The customer service, I've never had an issue with customer service. There are, with many of these brokerages, there may or may not be a physical location. For instance, there is a physical location for Fidelity here in town, but they only take deposits. You're not making withdrawals from them in person. So if you do have a check and you want to put it in your account, you can, but you can't make any withdrawals from there in person. But overall, I haven't had any issues. I had a HSA that I needed to the funds pulled out of. I called the HSA company and they really wanted to give me the runaround with it. I called Fidelity and I explained them the situation. It said, "Hey, just upload a statement and your account number, and we'll just go do it for you." And they did it. And maybe 3 weeks later, I saw the money in my account. So no real bad things I can say about Fidelity. I've really enjoyed my experience with them. Other than the occasional phone call I get when they want me to talk to somebody, but I think all of them are going to do that. So that's it. And as far as opening up account, it's not really that difficult. I mean, you can open up an account in 10 minutes. Literally, you go through, evaluate the offerings that all these brokerages have. What types of things do they have that you value? Do they provide, whether it's debit cards, credit cards, high yield savings accounts, webinars, resources, paper money. Some people want to do trade paper money if they decide to go and do other things like options and stuff like that. More of the, those are more advanced topics that we should do after we have the fundamentals down. So if those are things that you're interested in doing, definitely go through and just look at the offerings that each one of them have. And you can do it, like I said, maybe 10 minutes. You go through, you fund the account, you link the accounts, you can go ahead, you can purchase those stocks and those other investment vehicles, like I said before, and also you can also set up periodic or routines where it's going to constantly purchase whatever investments that you like to have. And so those are just some things that you want to keep in mind whenever you're going through evaluating different brokerages. And if you get into a brokerage and you don't like it, you can always transfer those positions that you have to another brokerage without actually selling all of them. So there's actually a process you can do that too. So don't feel as though you're locked in to a brokerage just because you started to build up a position in certain investment and feel like you have to cash it all out and take that cash because then you're triggering a tax event. You don't want to deal with that more than likely. So you can just actually go and transfer stuff over. And whenever you evaluate a new brokerage, just make sure to call that brokerage and say, "Hey, I have a account at this institution. I'd like to move it over." And they'll go ahead and they should be able to walk you through. You can just transfer that position over to them. They'll be more than happy to help you because they like to get your business. So that's it. So that being said, I want to go ahead and just kind of discuss what a brokerage account is, some of the features and attributes of a brokerage account, the different brokerage accounts, how to open one, and just let you know that it's not complicated. Just open one up. Once you open it up, you fund it, and then we got to go start investing in the stock market. So then, like I said before, we can start to get that compounding interest. So that being said, I want to thank you for your time. I am Nick Johnson, reminding you that if you have not subscribed, you're watching us on YouTube, please do so, and to follow us on your podcast platform of choice. I'm going to sign off here. reminding you to trust the process. Have a great day.